pull up Deepak Nitrite for you, and 5% up was on my watch list this morning with a thumbs up because of the numbers. Some of the numbers, the net profit was down because of a base effect and a one-time expense that they had, or a one-time income that they had in Q4 FY24. But having said that, there are always two sides of the story. This entire space is one that the street has been waiting for a turnaround for at least 6 quarters. Varsha joining us for the bull versus bear segment that we do. And Varsha, that's the big question, right? Apna time aayega, they say. Has it happened for chemical stocks and for Deepak Nitrite?
Well, I would say no, technically, because agro demand is going up, but there's still pricing pressure which is actually affecting all the chemical companies. But having said that, Deepak Nitrite, if you see Revenue and Ebitda growth beat estimates, but that is because of the one-time, or rather I would say a government incentive that has been received by the company. Excluding this incentive, the Ebitda was down 25%. It was below 25% according to estimates. Now, if I were to talk about the bull case, what went right for the company, the demand for dyes and pigments was resilient. This remains resilient, so this is one of the good things that happened with the company. But continued margin pressure, particularly in the agrochemical intermediates, has affected company a lot, and this is true for every other chemical company. Company saw strong rebound when it comes to phenolic segment, which is the bigger chunk for Deepak Nitrite, but advanced intermediates also saw quarter-on-quarter improvement. But on the other side, if you see, the advanced intermediate was subdued. This segment was subdued year on year, and that has also impacted the realization for the company. A company is moving towards 14,000 crores of investment, aggressively expanding into new products, which includes your value-added derivatives also, which should aid margin for the company. But on the downside, if you see, majority of this capex is aligned to phenolic segment, which is into a volatile segment. So majority of capex went into phenolics will create volatility pressure for the company, which may impact margins in the future. But despite all this, if you see, the stock is up almost 5%, because now one reason is today is the last trading day when it comes to companies F&O segment, and the position might be getting squared off, and this may be one of the reason why, despite Ebitda below estimates, the stock is up almost 6%.
Right, Varsha. Varsha, you have a great pulse of chemicals. Talk to us about what is currently keeping a lid with regard to stock performance as well as with regard to numbers. Is it still inventory which is keeping a lid to pricing?
Yes, absolutely. So all the con calls that I've been hearing when it comes to chemical companies, all are saying that agro demand is back, volume. They're seeing uptick in volume, but still pricing pressure persists. Even Aarti Industry says that they are habitual when it comes to pricing pressure that is still existing, and they are continuing to see this pricing pressure over the next 1 year. Even the innovator company, your big global agrochem companies and pharma companies, are expecting this pricing pressure to persist in calendar year 2025 also, which might impact your chemical companies, which are the generic chemical companies in India. This may not impact specialty chemical companies or the CDMO companies like you have PI Industries or Navin Fluorine, but the companies which are into commodity chemicals may get impact because of the flat performance expected by global pharma companies.
Point taken. Thank you so much, Varsha.